Charleston, and welcome to this week's edition of Navigate Your Wealth, brought to you by the team of Compass Financial. I'm your host, Kristin Oakley, and joining me in the studio, we have CEO Karen Stawicki and Samantha Irish, President. And today, we're going to be talking all about life insurance, but maybe not in a way that you are familiar with. Did you know that you can incorporate it as part of your overall financial plan that can make all of your other assets work even better for you? That's what we are going to get into today. Well, Sam and Karen, it's great to be back with both of you on set, and I'm just so happy to have this time with you.
I know, I'm excited to be back.
Yes.
Thank you.
Well, and for a lot of our viewers, if you're newer to Compass Financial, one of the things I love so much is that this is an amazing mother-daughter duo. Talk a little bit about how Compass Financial came to be.
Well, first let's talk about how the dynamic duo came to be.
Right.
At 11 years old, Samantha told me that she wanted to be my business partner. Sadly, it took a few years for it to actually happen. Actually, probably a good thing that she didn't happen when she was 12.
Right.
But we were in California. She moved to the East Coast, clearly said, I'm not coming back to Sacramento, and my husband and I decided that we needed to get back to the right coast. We're both originally born in the New England area. And when we did, Samantha and I finally got together and became partners in Charleston, and it has been such a blessing, not only for me, but especially for our clients.
Yes.
Well, and I think for our clients, our dynamic, relationship with one another allows us to provide to them a resource that a lot of times their financial advisor doesn't have. Because I am her succession plan, which means that for our clients, they know who's going to be with them, holding their hand through retirement.
Yes.
So when that day finally comes that mom retires, although
That's not
between all of us and all of you at home, it's probably never happening.
Right.
But whenever that day does come, there's not a transition to a new advisor.
Right.
They know when I'm sitting in those meetings and I'm helping them build those plans that I'm going to be able to get them through retirement.
And I also love the diversification of perspective that you all bring, not only from expertise and years of experience, but just being in a different age demographic. There's so many challenges that today's modern retiree is facing, and there's going to be changes, for our generation too, right? So being able to look at that from a comprehensive point of view is really valuable and very pertinent to today's conversation on life insurance. So, I think most folks have a basic understanding of life insurance, but what you are going to do for us today is unwrap some other aspects of it that a lot of people aren't really familiar with. So I'm really excited to have this conversation with you. Let's first talk about, when we're talking about life insurance, setting up this conversation, what is it and what is it about it that is different from your perspective?
Well, I think that as we dive into this conversation, I want to just start with the basics, right? Everyone knows that the purpose of life insurance is to provide a death benefit should something happen.
Right.
And that is an incredible benefit to a life insurance policy. But what we want to focus on today is the living benefits of life insurance. In order to do that, we need to break down the fact that there's two types of life insurance. There is term insurance. This is typically a less expensive type of insurance policy, and it exists for a period of time.
Usually when someone's working, right?
The amount of time for that term can be determined based on the situation. A lot of people use it during their working years to cover should their income disappear.
Right.
When you get a home and you have a mortgage, they want to make sure that you have insurance so that you've got, the replacement should something happen.
Right.
So again, there's purposes to the need for term insurance. Term insurance is titled term insurance because you can pick a 10-year term or a 20-year term. And what happens with a term policy is they take the cost of every single year of those premiums, they add them all up, and then they divide them by whatever the number of years of your term. So let's say it's a 10-year term policy. For the first 5 years, you're actually paying more than what the cost of the term insurance is. For the second 5 years of that term, you're getting a discount because they've averaged it over the 10-year period of time.
Right.
At the 10 years, that policy is going to expire unless you choose to pay to keep that term policy going. Most people do not choose that option because remember, the cost of the term insurance continued to increase.
Right.
So when you get to that 11th year, the cost has now also increased and is only going to continue to get bigger. Mm-hmm. The opposite type of insurance is permanent insurance, also referred to as cash value life insurance. We like to make the analogy that term insurance is like renting and permanent insurance is like owning.
Interesting.
Right?
Yeah.
So with your term policy, the beneficiary or the person that is getting the equity is the landlord, right? Is the insurance company.
Right.
You're making the premium payments, and the only way you benefit is if you die, which isn't actually a benefit to you. It might be to your beneficiaries, but isn't a benefit to you.
Sure.
But with a permanent insurance policy, it's like owning your own home. So you're building the equity. The same is true with that permanent life insurance policy. You're building cash value. You're building something that is permanent because it will live for your entire life. There is no 10-year permanent policy or 20-year permanent policy. And the presence of that death benefit on the day that you die is what we're going to dive into today.
I'm so excited that we're talking about this because I know, Karen, I know a little bit about your story, and I know this will come out in today's show, and I'm excited for our viewers to hear it as well. But when I first got into the industry, I was given a hard line by the company I worked for that term was better because term was less expensive for the client. Talk about why that is a misconception in a lot of ways.
Well, it really is. Perception is reality. If you are going downtown and you have to park your car, and there are two garages, and the first one says $5 to park here, and the next one says $1 to park here. You're probably going to park in the dollar garage.
Of course, I'm a thrifty girl, yes.
So you park in the dollar garage, you go to your show, you come back out, you get in your car, and as you're leaving the garage, there is a sign that says, had you parked over here, the $5 garage, we'd be giving you your $5 back.
So maybe $10.
Right?
Well, and the thing with term insurance and permanent insurance is it's the perception versus reality. Now, I want to make something very, very clear. When you started the show, you said the ultimate purpose of life insurance is to protect those in the unexpected, right? When you die. So I promise you, no one is going to ask at the funeral parlor, what kind of insurance did they have? And that's our job, is to make sure that your family is protected.
Yes.
But when we know that there is a 1-in-1 chance, this is an absolute statistic, that every one of us at this table is going to die. We just don't know what year.
Right.
My position is now, should it be term or should it be permanent? And I can tell you that, you insure your home for full replacement value. You insure your car for full replacement value. The number one thing that you need to be thinking about from a life insurance perspective is your income. Your family has lost you. They're never going to be able to replace that. But they lost the income that you brought to the table.
Yes.
And the problem with that is many people do not think about the human life value, the income that you would have brought to that family over your lifetime. And let me give you an example. If you have a printing press in your garage that prints out $200,000 every year, are you going to insure that printing press for full replacement value or partial replacement value?
For full, right?
That's right. So, you said we're going to bring out a story. I actually, for the first 2 decades of my career, was on the investment side of the business. And in 1997, New York Life approached me and said, we think you should come to work for us. And of course, my immediate response was, you're an insurance company. Why would I want to come to work for you?
Yes.
But I will tell you, after a lot of thought, consideration, and very compelling individual who said, no, this is why you should come and add life insurance to your portfolios for your clients, I said, okay. But I went in there still with the belief in my core that life insurance was smoke and mirrors, that the only person that was going to benefit was the insurance company. And I spent the first year with New York Life trying to prove how very right I was, which was the very best thing I could have ever done for my clients. Because in that year of trying to prove how right I was, I realized how wrong I was. And because of that year-long adventure of trying to prove I was right, and finding out, in fact, that I wasn't, I can tell you that life insurance is now, whenever possible, the very core piece of every single client's portfolio. It is the foundation, and it is the foundation because life insurance makes every other asset work better.
And I love that you present it that way, and I know we're going to get into some more reasons why that is throughout the show. I realize that a lot of folks watching might be of the mindset that you once were, that I once was, right? We're thinking of life insurance only in this one small piece. So if someone's watching today and they're going, you know what? I've never thought of it in this way. I've never thought of it being a bigger part of my overall financial plan. What would you say to that individual?
If you are wondering if life insurance could be part of your financial plan to make all of your other assets work better, pick up the phone and give us a call. We want to help you build your retirement roadmap where we show you just what the presence of life insurance can do to help those assets impact your tax burden, to impact the power of your Social Security, to impact your everyday dollars in retirement.
Wonderful. Sam, Karen, thank you so much. To our viewers at home, to start your own journey with Compass Financial and receive your complimentary retirement roadmap, again, this is for no cost, no charge, no obligation. It's simply an invitation to have a conversation to see how they can help and serve you. All you need to do to claim yours is call that number on the bottom of your screen, 855-348-3073. Or if you'd rather not talk to someone right now, but you do have your smartphone handy, if you simply pull it out and you open up that camera app, you can point, click, and scan the QR code there on the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few short, simple questions, and then a member of the team from Compass Financial will reach out to connect with you to schedule your complimentary visit that way as well. We have a lot more to get into today regarding this important conversation of life insurance. Stay with us.